So we're back to taxes. I'm trying to pass this exam, the EA exam, enrolled agent. The IRS gives the exam, and you can legally charge people to file their taxes. I don't think I really want to file people's taxes as a career. I just want to learn the material. And I think the best way to learn material is to take a test because it kind of forces you to understand it. So what I'm doing, I'm just going to talk about taxes when you inherit stock. Actually, when you inherit anything, and if you sell it at a gain or loss, you it works the same way. But we'll do stock because it's a stock channel. So let's say your father dies this year, and he owned Intel stock in his portfolio. So your accountant would need to know how much money your father paid for Intel. Say he purchased it back in 2000 and he spent $100,000 on the stock. It doesn't matter how many shares for this example, but $100,000 he spent in 2000 on Intel stock. When he dies, you receive all his shares in Intel, and it's down to $40,000, which is about accurate. It went down about 60% since 2000. So you just sell the Intel because you don't really want it anymore. So you have a long-term capital loss of $60,000, 100 minus 40. So there's a loss on that stock. So you could deduct the loss against ordinary income. But the problem is you can only deduct $3,000 a year on ordinary income. Let me give you two examples. It might make more sense. So in this first example, this is example one, you did not sell any stock for a gain or loss besides this. In the next example, I'm going to show you what happens if you sell a stock and have a gain to offset this loss. So you have $60,000 long-term capital loss. So you could deduct up to $3,000 a year. That's if you're filing single. If you're married filing jointly, it's still $3,000 between the two people. If you're married filing separately, then it's $1,500 each. So you're single, you can deduct $3,000. So that's what you do. So this is how it works. Say you're in college or you just have a part-time job, you're not making that much money, you're making $30,000. So each paycheck you pay taxes. Let me know in the comments if you want to talk about any particular stock. I will in a little bit. So every paycheck, say that's about $600 a week, $30,000 a year. So say you get paid weekly, because 30123 divided by 52. So it's 576 per paycheck. That's your gross, but your company takes out taxes, right? So let's say throughout the year, like when your accountant does your taxes, he looks at your W-2 and he sees that you paid $7,500 in taxes. So your net for the year is $22,500. So if you were paid weekly, each paycheck would be $433. That's how much you would take home. You would take home $22,500 divided by 52. So now your accountant is going to apply this $3,000 deduction because you could only do $3,000 against ordinary income. So your accountant would take your $30,000 of income, apply a $30,000 stock loss. So your net income is $27,000. So how much taxes do you pay on $27,000? Your tax rate is 25%. That's what I did here, 25%. So 25% of 27,000 is $6,750. So you should have paid I'm gonna use the word adjusted because these are your adjusted taxes. You should have paid $67.50 in taxes, but what did you actually pay? $7,500. But your company didn't know about this deduction, so they just taxed you on the entire $30,000. When your accountant does your taxes, he says you should have only paid $67.50 in taxes. That's your adjusted taxes. So your net income for the year, your net income after taxes is $22.50. So this is the refund you get from the IRS. You paid $7,500 in taxes, right? That's how much you paid. It was each month. And then when your accountant took into account this credit of $3,000, he's saying you should have paid $67.50, and this is what he provides to the IRS, this information. And then the IRS mails you a check for $750, and that's your refund. Like if your father did not die or died and did not give you any stock, you wouldn't have received this $3,000 deduction, and you wouldn't have gotten this $750 credit or check in the mail, but you did. Okay. Now you have a carry forward loss. So your original loss on this stock sale is $60,000. That's how much you can deduct off your income, $60,000. But like I said, you can only do $3,000 a year. So your original loss, I guess in 2025, is $60,000. The loss used when you filed your 2025 taxes, $3,000. So your carry forward in 2026 is $57,000. So that's the loss you can carry forward into 2026. So you can only knock off $3,000 a year. So it's going to take another 19 years to get through this loss. But that's assuming you didn't have any stock gains. Now let me show you an example. So instead of this first example, this is your situation. You might have a job also, making money, but let's just say you inherited the stock from your father, $100,000 from Intel. You sold it right away, and you got $40,000 in cash. So you have a long-term capital loss of $60,000. So you can deduct the entire $60,000. This is the way you do it. Let's just say you had a stock sale in 2025. You sold NVIDIA or whatever stock, and you had a gain of $90,000. So, like, say you bought 10K of Intel, and that NVIDIA, and you sold for 100K. You had a $90,000 gain. So you have to pay taxes on that gain. So I'm going to use 25%, my tax rate. So you have to pay $22,500 in taxes. So your net after taxes is $67,500. But now that's if you didn't have this write-off from Intel. Now when your accountant takes into account the write-off, he says, okay, you had a gain of $90,000, and then you have this deduction of $60,000. So your net gain is $30,000. So you only pay taxes on $30,000. You don't pay taxes on the entire $7,500, on the entire $90,000. So at a 25% tax rate, $30,000 is $7,500 in taxes. So you save $22,500 in taxes because of this write-off. And So in this case, you wouldn't actually get a refund from the IRS because you were not paying taxes throughout the year. So you just have to pay the IRS 22,500. I mean 7,500 instead of 22,500. So I guess let me remove that. That's kind of confusing. So now you have no carry forward loss because the original loss on this stock sale was $60,000. You use the entire $60,000 in this tax year because you had a gain to offset against it. In the first example, there was no gain to offset against it, so you could only use 3,000 max. Is that clear? I mean, it makes sense to me. I'm trying to break it down to explain it, but I mean, it's not super straightforward, but it is straightforward once you understand it. It makes a lot of sense. So when you sell and when you inherit a stock, or when you inherit anything, you can inherit a house, you can inherit artwork, and if you sell it, it doesn't matter how long you held it for, whether you held it for a week or 20 years, you're going to pay long-term gains or losses. It's never short-term when you inherit something. If you buy a stock and you sell it within a year and you have a gain, then you have to pay the highest tax rate, ordinary taxes. But when you inherit, it doesn't matter how long you hold it for, you always pay long-term taxes, which is what you want, right? Because long-term taxes are 0%, 15%, and 20%. But ordinary taxes are the high ones. That's your paycheck. You pay each paycheck, you get hit with ordinary taxes. Some people call them short-term. I inherited a dinosaur bone from my grandpa. Do you think? Probably not. But everything is worth what someone's willing to pay. So I don't really know about dinosaur bones at all. So a long-term capital loss, which is what we were just looking at, because when you inherit, it's always long-term, will always reduce long-term capital gains, which is what we did here. This long-term capital loss of 60,000 reduced the long-term capital gains. Before it reduced its short-term capital gains. And long-term capital gains are taxed from 0% to 20%. Short-term 10 to 37%. Another nuance is, say your father died last month. And he died in 2025. So that means he has to file, or his executor has to file his final tax return. So in the beginning of 2026, say you're the executor of his estate, which means you're responsible for everything, all his finances, once he dies. So you have to make sure he gets his tax return filed, his final tax return, which would be his 2025 tax return. So let's just say he had, after he filed his 2024 taxes, he had $25,000 of long-term capital losses carried over because, say, he sold stock and he just had a lot of gains and he wasn't able to offset those gains. So they just kept getting carried forward. And let's say when you did his 2025 taxes, you could only claim $15,000 of that $25,000. maybe he had a gain on a stock sale of $15,000. So you can offset part of the $25,000, but not the entire $25,000. So that $10,000 just goes away. Once someone dies, they can only the executor can only claim the carry forward on their last tax return, and after that, it's done. They can't carry it forward ever again. It would be nice if you could carry it forward onto because you're his executor, but you can't. It just goes away. Another fun topic. Actually, fun fact, my dad passed away in California and I was the only heir, but I couldn't be the executor since I live out. Oh, yeah. So you have to live in the country. There's a lot of rules like that. I remember when we were in Mexico, we were thinking of buying a real estate and fixing it up, but we weren't allowed to buy it because you had to be a resident of Mexico. So there's a lot of country rules like that. Okay. So I'm getting these questions from I like for $50 a month. There's this company called Hawk International. It's really good content, and it helps me study for this exam. And there's a lot of material to cover, so it just helps me study and puts it in a nice organized fashion. So a lot of the stuff is coming from this. I tell you, if you want to learn about something, just try to take the test or whatever test or certification they offer. If it's, I'm not saying actually sign up for the test because sometimes it's expensive. Some tests, you might have to dedicate over $1,000 to sign up for it and to get approved, whatever. But just go online and say you want to take the CFA, which I did. Just go online and like look up someone who's selling CFA books from 2021 or 2022. The information didn't change much, and you could get the book for like, instead of paying $500 for today's books, you could pay like $50 for 3-year-old books. And you don't care about the exam. You might not even take it, but just act like you're taking the exam. I think that's a great way to learn about a topic. Because I tell you, if you just want to learn about stocks and just say, I want to learn about stocks, and you watch YouTube channels and you read Investopedia, you're not going to learn that much. Because there's no goal, there's no like endpoint. You're just kind of like shopping for information in the world. But when you have actual structure, and especially like I have this book that gives me the topics, the material, and then I get quizzed on it, and then I take the quiz, I answer the questions. This is how you're going to learn, because it ingrains it in you more than just various information. Yes. We'll be right back. And if you really want to learn something, start a YouTube channel and try to teach it to people. You learn so much more when you explain it, especially when someone that you're explaining it to is a real person, like you guys are asking me questions. If you try to explain it to like your dog or cat, you're not going to get that much out of it. But if the person is responding to you, asking you questions, then you have to think of it in different ways. Okay. So Ariana purchased 100 shares of BMC stock 2 years ago. So that's down here. 2022, 100 shares. She paid $6,800. 2 years later, she sold these shares, the $6,800 of the 100 shares she bought. She sold it for $4,000. So she had a loss of $2,800. So she gets to use this loss to reduce her taxable, to reduce her taxes. So, but she's married filing separately. So she can only claim $1,500 of her long-term capital loss. So only $1,500 against her ordinary income. Because the best, you would want to claim as much as you can against ordinary income because you're taxed the highest rate. Like say you're making $70,000, you're taxed at 22%. You'd rather be taxed on long-term capital gains because if you made $50,000 or $70,000 long-term, it's only 15%. So you always want to reduce the taxes on ordinary income, but there's a limit. There's a limit to it. Only $1,500 per spouse. If you're single, it's $3,000. If you're married filing jointly, which is what me and my wife do, then it's $3,000 total. So I can use all $3,000, or she can use all $3,000, or we can use part of it each. I can use $2,000. She can use $1,000. But when you're married filing separately, it's cut off at $1,500 each. So that means that she deducts $1,500 from her income in 2024, and then $1,300 in 2025. She can't do all $2,800 this year. So I'll show you like what it looks like for married filing separately, married filing jointly. So married filing separately, say husband and wife, the husband's Jared, and the wife is Monique. So Monique has a loss of $5,000 from selling stock. That's a capital loss. So she may have bought 10,000 of stock and sold it for 5,000. So she has a loss of 5,000. Jared has a gain of 12,500. So he bought stock. Say he spent $10,000 on stock, and then he sold it for 22,500. So he had a gain. So if you're married filing separately, it's all separate. Monique can only claim $1,500 of the 5,000, and Jared 12,500. I mean, that's a gain, so he just had to pay taxes on that gain. But if they're married filing jointly, which I think is the better thing to do, it usually works out better. There are some nuanced situations where married filing separately works out better. But if you're married filing jointly, same exact situation. Monique had a loss of 5,000 from selling stock. Women, right? You got to lose 5,000. But Jared gains 12,500. But they can net it together because they're filing jointly. So they have a net gain of $7,500. So they pay taxes on the $7,500. So if it's 25% their tax rate, they pay $1,875 in taxes for this year. It's probably gonna net. It's probably gonna equal after X number of years. At some point, it'll equal, but in this case, you get it done this year. Where if you're filing separately, you might have to wait a few years to use your taxes, use your loss. And if it's a big enough loss, you may die before you get to use it, like we saw in this case. Like, which one? Oh, right here in the green. If you might die before you get to use your losses, and your whoever you give your estate to can't use it all, or like I said, they can on your last tax return, but then after that they won't get the benefit in the future. Good evening, Twan 123 Red. If my dad made a will, living trust, that it would have been fine. Estate planning, yeah, you definitely want a will or a livable trust. You don't want to just have nothing, because then it's a headache going through the government trying to get your father's money or your mother's money from their estate. Some people don't care. Like, they're like, I don't care. I'm gonna be dead. I don't really care. I don't even like my kids anyway, so who cares? Or some people don't have kids like me, so I don't even know who I would leave it to. I mean, my wife and I left it to our siblings, but I don't really care. Not that I don't care about my siblings, but I don't have kids. Why do I have to support people? Don't you ever feel you're supporting people while you're living a lot? Because I'm hoping if you're watching the channel, you're responsible with money. At least I know I am, and I've always been the one to be in the best financial position in my family. So you have to support people while you're living and support them when you die. Here's a funny story that happened yesterday. It was U-Haul. I rented a U-Haul because I'm the controller at a real estate development firm. And one of the properties, we've been using it as a warehouse for like 20 years, just storing a lot of garbage. So there's a ton of stuff in there, and it's pretty much all garbage. So we had some shredding company come and shred stuff, but there's still a lot of stuff in the warehouse, and we need to get it cleared out because we want to like fix up any like holes or damage, and then paint it, make it look nice, so we can rent it out. So I said to my boss, I'll just rent a U-Haul, and I'll expense it, and then I'll try to get as much out as I can. I'll bring it to the dump, because we're waiting for other people to get it done, and it seems like keeps dragging. And you're paying a lot of money for these people to do it. So I rented a U-Haul. I think it was like $135 for the day. Depending on how many miles. If I go over, I'd have to pay. And then so I filled up the U-Haul, and I went to two dumps. And the first said, well, somebody told me about a dump near the warehouse to dump the garbage. Somebody said, oh, there's a company, Recology, that is near us. There's a Recology near where I live that you can bring stuff, anything, and you could just dump it in there, and they'll dispose of it. But the Recology near the warehouse is not an actual dump. It's just like a service place for like vehicles. So they're like, oh, we don't take. I was like, okay. But the guy said, why don't you go to the dump, the county dump, so anybody can dump there. Anybody. And so I go to the county dump, and I'm sitting online for like 45 minutes because each truck has to get weighed in, And then I get to the front, and the county goes, "Okay, where do you live?" And I tell him the city. He's like, "Oh no, we can't take your garbage. You have to live in this county." I wish I would have known that, but he probably would have asked my ID. So I was like, okay, I'm not gonna like be a Karen. I don't argue with people. Um, so I figured I'll just go to the the Recology. That's it. I don't know if you've heard of Recology. I think they're all over the place. The Recology near where I live, because I know they take garbage. But it's far. It's like an hour drive. So, I'm like dirty. I've been like pulling stuff out of the warehouse, sweating, and I've been driving this big truck that doesn't drive that fast. It's not easy to maneuver. It's really big and bulky. So, it's a little annoying, but you got to do what you got to do. So I drive all the way back to Recology, near where I live, nearly an hour away, and then they tell me, yeah, you can dump this, but if it's a paint can, you cannot dump it. We don't take paint cans. But he said, but if you go to the dump next door, they specifically take chemicals and paint. I was like, okay. So I dumped everything, and I had like 50 cans of paint. So then I drove to the place where you drop the paint off, and he's like, is this all for your home? And I said, no, it's for the business. He's like, oh, we can't take it. You have to, if it's for your home, we could take it. But if you're a business, you have to schedule an appointment. So I was like, oh, just it's for my home. Just pretend it's for my home. He's like, oh, you told me. So I'm like, okay. I guess if you have a business and you have a ton of like chemicals to dump, they want to like regulate it. Like you could still dump it, but I think they just want to have the information, because in case people are doing illegal dumping, that's just my guess. So I was like, okay, got it. So I drove all the way back to the warehouse, which was an hour away, you know, and I'm hungry. By this point, I'm like an hour past where I thought I was going to end the day. Because I got up real early, like I started work at like 6, 7 a.m. So I wanted to end the day at 3. And it's already 3:15. And I still have to drive back to the warehouse. So I drive all the way back to the warehouse, bring the paint back into the warehouse. And then it's a little dirty, the bottom of the floor of the truck. So I sweep it all out, and there's glass in there from like the light bulbs shattered. So I get all that stuff out. I drive back to the U-Haul, and the guy, he's like, I just need the key. I just need the key. So I don't know what he's talking about. They gave me 3 keys. He's like, I just need the key for the car, for the truck. So I just gave him what they gave me, which is 3 keys. I don't know what all 3 or 4. I guess let me the glove compartment key, but I just used 1 key to turn the car on. And he comes back. He's really upset. He's like, we cannot accept a truck like that. I thought he was joking. I thought he was joking, like, because I knew I cleaned up the inside and I didn't damage it. So I thought maybe it got damaged. Maybe somebody hit it, or maybe I did hit something. So I thought maybe there's a big like, and I'm like, what do you mean? He's like, look at the back. I should have took a picture. Shit, that would have been good. Damn it. So I had proof. Damn, I didn't take a picture. Shit. I didn't think of that. But anyways, so I look in the back, and I'm like, well, what do you mean? Like, what's wrong with it? He's like, that's not how we gave it to you when you left. That's really dirty. And I'm like, oh, I was like, we sweeped up. I didn't realize. He's like, why are you arguing with me? I'm the manager. He was so upset. And I'm like, uh, I'm not saying you're wrong. I'm just trying to understand. So I was like, so what do we do? Like, he's like, you have to get that clean. You have to go to car wash, clean it out. He's like, or I'm going to charge you at least $200 to $300. And and I'm already like, I'm done for the day. Everything was delayed. And I said, okay, if that's what you have to charge me, I was willing, because I didn't want to drive. I didn't even know where I was. Like, the U-Haul place isn't near an area I'm familiar with. So I'm like, so I had to drive to a car wash. I didn't even know where to go. I'm sure I could have Googled it, but I was really tired and hungry at that point. I'm like, okay, if you have to charge me that, it's okay. And he's pissed off. He's like cursing and stuff. And I was about to leave, and then I turn around. I'm like, why are you still so upset? Like why are you still yelling at me? You gave me the option, and I said, charge me 200-300 if that's what your business does. That's fine. He's like, but I don't want to clean it. I gave you the option to clean it, and you don't want to clean it. And then some woman just coming out of the bathroom, she hears us arguing, so she kind of sides with him automatically. She's like, why are you arguing with him? I'm like, I'm not arguing. I was just asking a question, and then I accepted. I'm not. I can understand if I said I'm not paying $200-300. There's no way I'm paying two. But I'm okay. I understand. If you say it's 30, I have to live with that. And whatever you charge me, you charge me. I'm not gonna. I don't have the time. I said I said if you said I have to get it cleaned, like you did not give me the option, a $200-300 option. If you said you have to get it cleaned, then I would get it cleaned. I mean, but you gave me the option. You said this is our rate if we have to clean it, and I took it. I'm like, so why are you still cursing at me, and why are you still so pissed off? And he's like, so as I was driving back, I was trying to, in my head, I'm like, I think I figured it out. I could be wrong, but I was like, he's probably pissed off because he was by himself. He has a lot of work to do, I guess. And this is more work that's added to his plate. And he's just a manager. He's not, it's a big company, a big moving company. Well, it's U-Haul, but it's part of U-Haul. It was another company, part of U-Haul. So I was like, he must just be pissed because now I added something that he has to do. He's going to charge me $200-300. He doesn't get any of that money because he's just an employee. So I said, that must be it, because I didn't understand. I could understand if I was like pushing back, because he did say once, now I'm going to charge you $200-300 and you're going to deny it. I was like, no, I'm not denying it. I mean, all I said was we did sweep up at the end, but if you're saying it's not clean enough the way we took it, I get it. I'm not saying, I'm saying it's okay to charge me. I just was under, why are you still like cursing at me and yelling at me? I mean, it was annoying. It was like, and I was in a really bad mood, and I wasn't like cursing it because I don't really curse at all. Even if I'm mad. So I don't think I was getting agitated, but I was in a bad mood, but I think I was calm. And then and then the woman, she's like, why are you arguing with him? And she's like, and I'm like, I'm not arguing with him. I understand he has to charge me. She's like, why don't you just ask him how much he's going to charge you? That's the problem. You don't know how much he's going to charge you, so you're getting upset. I was like, he told me hey, how much he's going to charge me. I'm not denying it. I understand he has to charge it. I just want to know why he's so upset at me. And then the guy's like, why are you still here? Just leave. So I called U-Haul and I left the complaint. So the complaint's going to show up on the order. And I was like, you have to take responsibility for your actions. I'm not looking for a discount. I just wanted him to kind of like, not apologize, maybe apologize, but I just wanted him to say, oh, sorry. whatever. I'm having a bad day. I thought you were denying it, but cash opens the eyes of the dead. Small people with small amounts of power relish execute. Yeah, it's true. And the first thing is like, why are you arguing with me? I'm the manager. You support those who support you. Well, obviously, I'm not going to go back to that company again. I mean, I haven't used U-Haul in 15 years. I think in New York City, I rented a U-Haul when I moved my apartment. I haven't used one. But look at their reviews. Out of 8 reviews, it's a 1.9. And this is the U-Haul. This is the one I went to. And it's almost all ones. I didn't write a Yelp review because that goes out to the world. I want to give them opportunity to maybe get back to me. And I'm not looking for them to not charge me. Of course, it would be nice if they didn't charge me, because I think to clean up, I mean, there was just dust. There was a lot of dust. I don't think it would cost $300 or $400. I could understand $100, one person's time for a half hour, but it wasn't really that much. It wasn't damage. It's not like I spilled paint and it's permanently on the floor of the truck. But so I'm not looking. I was just in a bad mood already, and I wasn't going to take shit from anybody. Like, already at the point, if anybody said anything, but I think I kept calm. I said to the person I talked to at U-Haul in corporate, I said, I hope there's a video camera, because I don't think I was upset or cursing. And so they do have a 5, probably from like a relative of the owner, put a 5, but it's all ones. I could see a lot of people getting upset and saying, there's no way I'm paying this. There's no way paying that, which they probably get a lot of. But I was okay with paying it. I mean, because I wasn't going to extend my day another hour. I just was done. It's a funny story, I think. So any stocks anybody want to talk about? Do a DCF? You support, those support you. Good evening, everyone. Yeah, let me know if there's any stocks, because I don't think you guys want to talk about taxes. I mean, I can talk about that all day because I'm going through this booklet. It's interesting information, but this helps you because as you understand taxes, you understand why cryptocurrency is carried in the balance sheet in the way it is, because there's no asset called cryptocurrency. So they can't record it exactly how crypto should be recorded. They're recording it as land. So they're using the same kind of criteria as land. So that's why it gets recorded in the balance sheet at original cost. And it never depreciates. If you sell it, you do show the gain or loss from the sale. Verizon? I never heard of that. Verizon. Is that a new company? SOFX? Is that SOFX? SOF. Do you mean SoFi? Verizon. I'm just joking. Of course, I know Verizon. You meant SOFI, right? Oh, did you mean SOFX? Telecoms. Thinking of switching list for the next pullback. Thinking of a watch list. Verizon. SOFX is a double levered ETF tracking SoFi. I would avoid these types of things. It's so hard to make money, and if you do, you just get lucky. It's a timing thing. It's not, no, wait, I can't stand this noise. Not SFX. It's interesting, I guess, to look at these things, but it's so hard to make money because you never know when to sell. I mean, it went up a lot. March 2025, it was 10, and so more than doubled in like 4 months. DeFi daily target 2x SoFi. I think if you can't explain your investment to like a 10-year-old or a high schooler, you shouldn't buy it. Even some stocks which seem like, if I asked you what does this company do, a lot of people don't know who own the stock. MP Materials. But that's not to say you can't make money. Of course, you can time it right and get lucky. It's just really hard. SFX delivers 2x leverage to the price movement, SoFi technology, less fees through derivatives and swaps. I could see you making a lot of money. You got to really track these things. So you got to track it closely. And when it's at a low, then it's a good time to jump in. But you can't wait too long because it's going to come down over time. Like USO, which is an ETF that tracks oil. So this is, I think, double levered. But if you look at it in the long term, you see it was $900 at its peak. This is because they do reverse stock splits, and now it's down to 75. It's good. It has to go down over time because oil doesn't look like this, right? Oil hasn't gone down 90% since 2008. But the reason this goes down is because of the decay risk. They have to keep rolling over the options contracts. MP Materials, that's a good one. U-Haul. I'm gonna tear apart this company, U-Haul, after what they did to me. At least the operator on the phone was nice. He was apologizing to me. I'm really sorry this happened to you. And I was like, he might have been having a bad day. I know if I have a lot going on, sometimes I get moody. So I'm not gonna like. I just it just didn't seem appropriate, especially when the customer started ganging up on me too. So they were both like yelling at me. But I was, I was in a mood that day where I wasn't gonna take any shit from anybody. Like if it was normal day, I would just be like, I would acquiesce and be like, okay, fine, charge me. I'm done. I'm gonna go home. But I was just so annoyed that okay, 11 billion $62. 62. Let's do a quick DCF. This is a great way to look at the stock and see if it's obviously over or undervalued. Like Buffett does something similar, but he uses a lot of like he might not build a DCF model, but he can usually do it in his head. His theory is if something is a screaming buy, he'll buy it. But if it's not a screaming buy, he won't buy it. If something is a buy, but it's not a strong buy, he's probably not going to buy it. And he doesn't even buy screaming buys. It has to be a really, really screaming buy, and him and Charlie have to agree. And Charlie usually doesn't agree. So this seems like a pretty big buy. Pretty undervalued. U-Haul, why is it so undervalued? Is it because autonomous vehicles are gonna take over and we won't need U-Haul? So it's trading at this same level 4 years ago, over 4 years ago in March 2021. So it's come down a lot. 77 was the peak. So it's not that far off from the peak, but it seems really undervalued. But if it's 130, the valuation, how come it never even hit 100 all this time? So you could have bought it. I'm sure I would have said the same thing in 2020, 2021, 2022. This thing's worth $100, and you might have bought it, and it never hit. It didn't even hit 80. So at what point is it going to actually hit 100? It might not. Like they're saying 144, Simply Wall Street. The analysts are saying 92. So everybody's saying it's undervalued. But I gotta be right back. I gotta help my wife bring in the groceries. Okay. So U-Haul. Now I could understand companies uh like Western Union. I get that why that would go down and people wouldn't buy it. But why U-Haul? Like it's not like AI is gonna take over U-Haul. It's well, it's not profitable like their profits are going down. You can see that's down here profits 367 million. It was 5.7 billion. And their revenue is not going down. It's flat. But their profits are going down a lot. So that's probably a big reason. Merck, um, chart. It's hard to say. So you notice this with stocks is they have resistance levels. So as they go up, they hit new highs, and that becomes a new resistance level. So about $80, $78 is the resistance point. And it will break through that at some point, but it could take a while. And then the new low, it has a resistance on the bottom too. Like it probably won't get below 44 for a long time, if at all. Unless they go bankrupt, it'll probably never get below that resistance level. So you can see it stays within that band of 44 to 80. And it broke through slightly, almost hit the 80 here. But unless it breaks through and stays there for at least a month, it's not gonna get to a new level. It has to usually trade. Let's go further back, and you could see this is what good companies, garbage companies, you can't really. So you can see in 2015, it finally broke through 40 for the first time and stayed there for a few months. So that's kind of its new high, the resistance high. And then it had a low. That was the COVID low. So that was a little artificial low in the low 20s. So that was a new kind of resistance points. Then finally in 2020, it broke through the 40. I mean, it took a few years. It took what, 3-4 years. Then it finally broke through and it really shot up big time. And now, how long will it take to break through 80? Well, we know it took 2015. So it took 5 years to come up with a new resistance level. 5 years to get past it 40. Now, how many years, if it's 5 years to get past through the 80 to the next level, the next level is going to be, it could be 110, 120, 130. We don't know, but they just have to break it at some point. So if it takes 5 years, that means by the end of 2026, it should break through to new highs. Of course, we don't know when there's going to be market crashes and market surges. When there is a market crash, then that's when a new low, or that's when we figure the stuff out. And when there's a big bull run, then they get to new highs. So if the market is not really going up or down too much, most stocks are trading sideways, this will also trade sideways. Of course, if they announce they're filing bankruptcy, that's different. Then it'll just go down. Or if they announce that, like NVIDIA, like we tripled revenue, we tripled, then it gets crazy. But as long as it doesn't, and as long as it just has a normal growth rate, it'll just trade sideways for a number of years until it finally gets to a new high or low. I mean, all good companies, same thing with Apple. So it's a little hard to tell. But in 2012, that was the resistance level, $30. And it took until 2015. It took 3 years to finally break through. But this stock grew a little more than most, percent-wise and dollar-wise. Yeah, volume is important as well. Look how high the volume was in 2008, 2007, the Great Recession, and it was red. Lots of sell-off. When it's red, that means sell orders are higher than buy orders and the stock goes down. And when it's green, the opposite. So it came down a lot during this time frame. You can't even see it on this chart. Well, let's see if we can look at it. 2007, 2009. So this is a lot of red. So it pushed a stock way down. I don't know why they don't show the stock price. I guess this is a stock price. It was $4. It wasn't $4, but that is the stock splits in the past make it look like this. So it went from $6 down to $3. So it went down 50%. But that's what happens when the stock gets high, is that people want to take in their gains. When people buy a stock, they put in sell orders. So say I bought a stock for $100 today. I don't do this, but say I bought whatever it was, 50 shares. Say I bought 100 shares at $100 each today of a stock. Well, I'll put in sell orders just so I don't have to track the market. So I have 100 times 100. 100 shares at $100 each. So I'm going to put in buy orders. So I got 50 shares. I mean, sell orders. 50 shares at 150. So if it goes up 50%, I'm going to sell half my stock. And then I got 25 shares at 160. 25 shares at 200. Regardless of your level, you might have 50 shares at 120 and 25 at 130. Regardless of what you put, once you have this set up, and 10,000 other people have a similar setup, they have sell orders, which are always higher than the stock price. You're not going to sell it for less than the stock price. Because if you wanted to get $90 for the stock, you could just sell it for today at 100. So it's always higher, the sell orders. And that's how the market tracks it. And when there's more sell orders than buy orders, because if it's this red line, okay, you can see in the top left of the screen, the volume was 9.37 billion. That's a lot of volume. 9.37 billion. That's the peak volume. 9.37 billion shares. So it's not every time there's one share sells, there's a buyer on the other side, and every time someone buys stock, there's a seller. So it's always a one-to-one relationship. But the way they know if it's red or green is if they're the sell orders and the buy orders. And when there's a lot of pressure, when there's a lot of sell orders, it's a lot of pressure, and the bears win. That's why it goes down. And when there's a lot of buy orders, the bulls win. There's lots of pressure putting the stock price higher and higher. Just something to think about. Mercury. $203 billion 81. Lots of free cash flow. 26 billion. This says it's on a bill. Let's go a little lower. I think let's pretend it's 20 billion, 21 billion, 22 billion. I'm just projecting the future free cash flows. And the terminal value estimates the free cash flows after year 3. So I'm at 118. So it seems like a pretty good value, right? And you get a dividend. You get a 4% dividend. And they always raise their dividend. So it's kind of high. I guess the stock price has been coming down the past few months. That's the only reason the dividend got so high. Let's see. I don't know if that's the case, but that's by looking at the dividend yield, that's what it indicates. And that is accurate. You see, it was 126 and now it's 82. So the only way the dividend yield goes up fast is when the stock price goes down. Because a company's not going to raise their dividend. If they're paying a 2%, 3% yield, they're not going to raise it to like an 8% yield. It's just crazy. Save a lot, ever increasing dividends. It does look tempting. It does. So it's trading at 1999 levels. So why is there such a disconnect? You can't be the only one who figure this out. Because there's analysts who get paid a lot of money, and that's their full-time job to analyze this stock and all other stocks in its sector. Why is it it's a long 26 years without any upside? Let's see in the past performance if there's any indication. So their revenue has been going up historically, but their profits aren't really moving that. It's not in line with the revenue growth. It is profitable, but it's a bit all over the place. It's probably due to lawsuits, because a lot of these companies get sued for like many billions of dollars, like the opioid epidemic. Why is Merck stock down since 2000? Merck experienced a mixed performance since 2000 with a drop in the early 2000s, followed by recovery. So you see this, the stock soared, but faced a major downturn due to the expiration, the patent expiration of Vioxx. Due to patent expirations and the Vioxx scandal. So that's the two big things with these types of companies, medical companies, is patent expiring. So lots of companies will have they have kind of a lock on a product. So if they have a patent, they have 20 years to sell the product, so nobody else can touch it. And then when the patent expires, then other companies can sell that product with the same ingredients, just a different name. So it's like the no frills version, and a lot of people will buy the no frills version because it's cheaper. Some people just feel comfortable. They've been always buying. What's a good example? What's patent expired drugs? Anybody know a good example of a drug that had a patent expire in the past few years? I think Viagra patent. Viagra was the only erectile dysfunction drug for 20 years, from 2000 to 2020. And then other companies can start selling it under the Viagra sales. You can see the difference in sales probably starting in 2000. They had rock hard sales until 2020. Then sales went limp. So it's 20 years. So it's about the year 2000 when they got the patent. And it does take time, because just because you have a patent doesn't mean everybody's going to buy your drug. It took like 3-4 years to peak. It almost hit 2 billion, but then it even got higher. In 2012, it got even higher than before. And then it started coming down. And then when the patent expires, you can see sales came down a lot, around 500 million. So other companies started selling the drugs. I invested in Merck, as 2 people I know died from cervical cancer. They have the treatment via the HPV vaccine and Keytruda. So with a company like this, you want to look at their pipeline, like, and what drugs they have. They're more popular drugs, and when does the patent expire on those? Yeah, Keytruda for cancer, Januvia. So yeah, one thing to do is just look at like Keytruda and the other drugs, see when they expire, and if it's not for another 5-6 years, that's good. You also want to look at the pipeline of drugs. Do they have? And a lot of companies just acquire. So in order to build that pipeline out, they may just acquire another pharmaceutical company or another company in its industry. Yeah, it's so much to look at, but just in terms of the market price, it seems like a really good value without getting too deep into the due diligence. Keytruda does expire, but they are going to repackage it as an injectable and repatent it. Okay, that's good news. That's one way to do it. What are some other tickers? The trade desk. Did I do like the other day or? $37,074,000,000. I'm just so mad about. I tried to. I picked a drug company that develops antigens. And I remember I kept buying more and buying more, but the company wasn't a good investment. I just wish I did the same strategy with Palantir. I could have had like $5 million if I did the same strategy. Maybe more. I guess no one knows, right? You can't unless we went back to the future like Michael J. Fox. But that's not. Well, look at this growth for the trade desk. Wow, 1.1. So this seems overvalued. Let's raise the. I'm trying to give them more free cash flow, and it's at $56. But some stocks are just always overvalued, no matter what you do, but they keep going up. And some companies are always undervalued, and they keep going down. Let's see what the analysts are saying. Okay, so Simply Wall Street's at 88. Analyst at 86. So everybody's saying it's a good value. Well, except me, but okay, there's insider selling, there's no buying. Institutions own 72%. Employee count going up a lot. If employee count's going up, that means businesses is growing. Or they're acquiring a lot of other companies. Okay. Anybody want to talk about taxes? Any other taxes you want to talk about? Okay. What? I guess we'll call it a day. Happy 4th. Thanks for joining.